The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Yep, Basil, the day is young, Chapman, because this is going to be a very interesting way of looking at the market. And if you take into account that from Friday's close, the next 100 point close on the Dow, either up or down, it could be quite decisive, technically. So, thank you, Steve and Tom, for great shows in the first 2 hours of the day. It's always wonderful to hear. And today I will be doing Larry's show. Larry's taking a little time off, so I'll be here from now until 1 o'clock Eastern Time. Monday, Wednesday, Friday, I'm usually here. Monday, Wednesday, Friday, I'm usually here 12 o'clock till 1. 877-927-6648 is the number to call. Actually, this is a great day for calling because I'd love to be looking at areas that perhaps I could take a little more time on. Spent quite a bit of time this weekend just going through charts. Now, let me show you something. If you look at, let me give you the numbers first. Let me just clear the deck. Here we go. The Dow is at 13,212. The S&P is up 4 at 1412.56. The Combo Index is up 9 at 3,100. Gold is up 11 at, what was it? I just missed that number. I've got it right over here. All right, let me just, actually, I wanted to look at the gold chart as well, so let's do that. This is the GCM, that's June. Yeah, gold's at about 1682. It was so close. If it pulled back and held the low of earlier on this morning, then you would have had that pattern that said, whoops, be careful, because if you test the 200 period exponential moving average of 1657, it's called 1658, and start to break down, that would be not very good. So I'm watching that, and also if you're looking at silver, if you're looking at, say, it's the May contract that I'm looking at in silver, silver's just squeaked. Let me see, 33,190, and the high today is 33,180. So 11 cents, and it starts to make B, and then it bumps into 33.29, which is the 200 period exponential moving average. Now let's go on, because if we look at the crude oil, if I go to the USO, I like to use that. It just gives me a better sense of what I'm looking at. The USO has failed to give the left side, right side price time match in the weekly chart of the last high back in April of 45.35 and 45.60 back in May. Well, that's very interesting, because what it's saying is it's making a sideways consolidation. The USO is between, this is the United States Oil Fund LP, and it's between the 200 period moving average of 42.90 and the support that really has to hold of 36.67 in the next week or so. If it breaks under there, if it closes under there, that would be negative. The monthly chart, meanwhile, is trying to walk the 9 period exponential moving average. So that says to me that we could be trying to make a bounce here, and 39.99, let's call it 40.20. It's probably the number to break in the next 2 days, and then USO, the crude oil, can rally a little bit more. If you go to bonds, bonds are up. Now this is quite important, because the TLT is in a trading range. It filled the gap. It went down all the way to the 110.10 area. 109.69 area back on the 19th of March. Then there's that gap from the third. There's a TLT Lehman 20-year iShares T-bond fund. On the 13th of March, it went down to 113.89 and then gapped down the next day with a high of 112.75. It filled the gap last week, and now it's pulling back again. Now the pullback is holding the 200 period exponential moving average. Now that arch formation that becomes a rectangle within a rectangle tested the 109.82 level by breaking under it for a moment at 109.69 3 weeks ago, and that was the week of the 23rd of March, and now it's bouncing back in. It's attempting to rally, and it's attempting to rally over 114.48. If it can do that in the next couple of days, that will say that the TLT is finally seeing some energy instead of the weakness that's been prevailing on the weekly chart for, since December, I think. Since December, the week of the 23rd at 124.02, that failure to break to the new high. So that's, and what's important is that in the monthly chart, you've got a pattern here that says you've made a huge W with a retest of the 123.15 to 125 area, 126 area, and now you've got to watch for them on a monthly. But in the month of April, last month the TLT closed below the 9-period exponential moving average. That's in the monthly chart. This week is going to be critical, because if it says, I have no strength whatsoever, and it breaks under 109, there's a good chance that in April it'll actually go lower. You're going to see rates start to rise quite a bit, and we'll see how that impacts the market. Now, one thing we want to look at is the DXY. This is the dollar index. Dollar index is attempting to rally. It really has been quite pathetic for a little while. And yet it's still within a trading range. So pathetic in the sense that from the time that it hit 80.74, the week of the 15th, on the 15th of March, it's pulled back, it's failed to rally at all, and it's failed to close above the 9-period exponential moving average, which is at 79.22. Stochastics right at a point where it should be rallying, and today in fact should have been a rallying day. It's up at 2 cents at 79.02. It's really not a big deal. So now what I'm looking at is if the dollar in the weekly chart makes this another cup formation, that'll say it needs very quickly to break above 70, I'd say 80 to 81. That area must be broken quite quickly. In fact, if it breaks over 80.74, that will start leg B in the weekly chart, and that will say, okay, it could try to test the 81.78. In other words, if the dollar breaks and closes under 78.18, I think that's going to weaken the weekly chart very much, because the MACD is bad, not looking good, stochastics way down 35%, and the monthly chart says, be careful in April, you might close underneath that 9-period moving average of 78.32. Now here's another thing, EUR-USD, the euro currency pair. In the euro currency pair, what we're looking at is on a daily basis, it just missed, just barely, 1.335850. Anybody can remember those numbers. 33,850 was the number that it went to on the 27th of March, and today it went so close, it went to 3798. So that's 60 something pips away. So it's really close to making that leg D. And if you had to go to the USD JPY, that's even more interesting. Because what did that do? That made a C1, C2 double top in the Chapman wave. Remember, I take those, you can call it G. G is just as good. But C1, C2 says it's a particular pattern that I look for in the Chapman wave that says you're making a double top and you just barely failed to go to a new high. But the reason why you failed is because the MACD and stochastic were giving failure patterns. And that says that C2, which essentially says in the Chapman wave, it did not have that fourth leg up, is a big negative. But wait a minute, big negative, it only pulled back a little bit, and then it rallied, and now it's making slightly lower lows and lower highs. That says to me that if the US dollar Japanese yen currency pair closes under, it's at 82.049, if it closes underneath 81, let's call it 81.69, then it's probably going to go down deeper. Now, I always like to talk, I like to look at the market and say, what am I getting right? What am I getting wrong? I did a great deal of studying of this chart, and I said to myself, if the Dow starts to slide under 13,170, and in the back of my mind the full sentence was, and I meant to type it exactly the way I thought of it, and it holds there for 2 bars, that's 2 120 minute bars, then there's a good chance that the cup formation in the Dow daily chart, which I'm showing right now, is the one that's going to work. And that actually is what happened. It went underneath, and it only went there for like 10 minutes underneath 13,170, at which time I said that we need to, for security, we want to short, so we shorted it. The Dow there, we're probably going to be taken out, although it's holding very well right now. I mean, the position that we have. But I just felt so strongly that if we were to close there, and that was, I didn't spell it out correctly. It was my mistake. It's just a poor mistake, an error on my part. I thought I did it, but as I saw the whole thing unfolding, I checked what I had written, and I did not do that. And we still might not get stopped out, but the issue is that I wanted to see a close below the 13,172, the 13,170 area of the 9-period exponential moving average for this to work. Why? Because then we would say the best you're going to get is a rectangle formation. The worst is the worst pattern would be that it goes back to the candle with the long wick of Thursday, down to the 13,151 area. And the best case basis for the Dow, that is, not the position, but the Dow, is to take out the high of the 27th at 13,265, and then immediately say, ha, now we're going to tackle the 13,289 level of March the 16th. So far, that's the one that's on track, is the cup formation going to the upside. And I had a question, what's the best short to FXY? You know what, it's a while since I've gone through those things. Let me think about that. In the meantime, we're going to go to our first caller, John in Philly. Hi, John, how are you?
Good morning, Basil.
How are you doing?
Very well, thanks. How about yourself?
Very well, thank you.
Hey, real quick question. I'll be real concise. Is there question is on IWM?
That's the iShares Russell 2000 Index, ETF, yep.
And my question is, on the monthly, weekly, daily, is there anything in the ChapmanWave analysis that suggests an imminent trend change there? It's clearly in an uptrend. My question is it about to change trend? What do you think?
Okay. That's a very good question, because I spent some time on the different indexes and the ETFs as well over the weekend. What I did is I drew in, if you can see here, folks, if you're looking at Tiger TV, Tiger 1, and I'm also archived on Tiger 11, you will see I'm going to do let's go through the monthly. Let's look at the big picture first. The big picture says there was a V-shaped pattern with a left side, right side time price match from the 85.20 high of back in June, I think it was. Yep, June of 2007 at 85.17. And it plunged down to 34.26, and that 34.26 is even more interesting. Why? Because of the 32.20 low back in October of 2002. So I'm looking at this, I'm saying, wow, there are parameters that keep on being hit, and I'm going to explain what I'm looking at here. So we'll be back with John in Philly. The Dow's up 17, S&P's up 5.87. I'll be right back. Basil Chapman, 877-9.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're on with John in Philly. We're looking at the IWM. The S&P's up 640, the Dow's up 23, and the IWM, which is the iShares Russell 2000 Index ETF, is at 83.29, had a high today of 83.39. So this is what I'm looking at. If you look at the monthly chart, John, that move to the 34.26 low, which is 2 points above the 32.20 low of October of 2002, so a rebound. And where did it go to? It went to 86.82. Well, where's 86.82? Why, it's 1.5 points and 1.25 points above the 85.20 high of October of June of 2007. So the rectangle formation that says very clearly, up until now, in the very longer term charts, you've got a boundary that's set like a little go-kart and stuck in between those tracks, bumping from side to side. Says, what's the next step that could happen? Well, if you look at the 200 period exponential moving average, the iShares went 153% higher from the March low of 2009 to 86.82. Then they pulled back from May of last year. Where to? To 60.09. Where is that? I'm clicking on this particular line so that folks in the Tiger TV can see it. That is the 200 period exponential moving average. The MACD went negative. Stochastic went way below to about the I'd say the 40% area, and is now only at 76%. It hasn't even gone to 200%, yet the price is very close. The high of last month was 84.66. That's 2 points, 2.25 points away from the all-time high. So at this particular point, monthly chart says nothing here is negative at this time, but be a little careful because April's only just started, And we've got to see if the MACD can hold above the yellow line, which is the 9-period differential, the fast-moving average, can hold above the slow-moving average, that's the red line,
right?
And if the stochastic's going to hold. So at this point, right now, as we're talking at 11:25 on Monday, the first trading day of April, so far there's not a single clue that says there's a change in trend. Right, because everything's pointing up. If I go to the weekly chart, and the weekly chart is a little different. Why? Because I always call the weekly chart like a sandwich. What happened when the markets tanked from 2007, the weekly charts collapsed so much that the daily charts came back quickly. The monthly charts were starting to improve, but that poor old weekly chart took forever. Well, now the weekly chart is looking very strong. The histogram is declining, but the MACD is still very strong. That's those little vertical lines, way above the 0% line. It is walking the 9-period exponential moving average. That's since the week of the 2nd of December, when it went to 74.63. The IWM has held that white line, the 9-period exponential moving average. Then there's another pattern here that I call the ChapmanWave falling axe. It's really a declining cone. And if it closes decisively above it, usually I like to say maybe 2 out of 3 bars. In this case, it'll be 2 out of 3 weeks. So you've had one right on, one that closed above with a red candle but still closed above. And this week, so far, of course, we can't talk about it, but so far this week it is an inside bar to last week, and that's positive. But that says that if the IWM was to take out 84.66, you could have a measured move from 78.41 to this trend line of 82.32. So it's about a point. So that's a point above the breakout, which is 82. So it's 83.33. Does that take you to? No, it doesn't quite take you to a new high. But no, it's more than a point. I'm sorry, that was my arithmetic was wrong. It was 78.41. So 78.41 to 82. Oh, that's 3 points. So 3 points from. I usually like to be very conservative, so I take it from that bar there. Yeah, that's 84.68. So 84.68 takes you above the 84.66 level of the week of last week. So those are the parameters I look for. So nothing yet technically wrong, except if you look very closely, you'll see that the peak D that was made, the fourth peak that was made, the fourth highest peak that was made from the 60.09 low of October, that went to, on the 17th of, the week of the 17th of February, went to 83.31. Look how the MACD is climbing and the stochastic just turned down, but still was way in the 90, 95, 96% area. Last week it went to a higher high. MACD is still good, but the stochastic starting to turn down. It's at 86%, 88%. That's not negative. So now we get to the daily. Oh, there's the music. I'd like to take a little moment here because it's really important that if the IWM is going to do what I'm going to discuss now, we'll have very clear parameters for the next few weeks. So if you don't mind holding, John, we can go through the daily in a moment.
Thanks, Basil.
Great. So we're looking at the IWM daily chart. It's up 53 cents at 83.34, and we've got a ChapmanWave stork leg formation, perhaps.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. We're back with John in Philly. The Dow's up 31, S&P's up 761. It was leading all morning. That's been dragging the Dow up, and that's very impressive. I have to tell you, looking at the charts, if the market had closed right now, I'd have to say that's really impressive. Good candle on the Dow. Follow through from Friday. Now, you often expect that after the kind of action that we saw at the end of the month, you get a little bit more buying the following day, but I was expecting that at this point we would start to dip down, have an early morning pop-up, and then start down. So we're going to be watching this closely. But in the meantime, the IWM, which is the Russell 2000, which wasn't acting weak, it was acting weaker than the others for a while, has a pattern that's quite important. And actually, in the 120-minute chart, I just, when I look at my charts and I do my peak A, peak B, peak C, when I look at something and it just is something wrong with it, I always say to myself, you must have missed the count. It's like when your gut says to do something and the action of the chart says to do something else, and you go with your gut, and then it does the something else, you say, oh, or when it does it, you say, I knew that was going to happen. So I'm looking at it, and I see that I missed. I thought I had a peak, but it was covered by the the 9-period exponential moving average. In fact, what happened back at 11:30 on the 7th of March, it went 79.41 was the high, then 79.48 was a high, and then 79.53. I thought it was lower. So I looked at this and I said, no, I can't. I don't know how to explain this peak, because it looks exactly at the pattern that I call the double camel hump, where there's another an arch formation in either the stochastic or the MACD or both, and then it fails, and that's exactly what happened. So now I have a peak E in the 120 minute at 15:30. That's 3:30 in the afternoon on the 19th, and it pulls back, where? To 81.25 at 11:30 on the 23rd. Then it runs up and it makes these two little peaks. This is a pattern that I'm really familiar with. That's why I looked at it and I thought, so I can't have an A minus at the top there. So that tells me that's a peak F and G, and that is in my this I call it a book, but it's really not a book. It is 40 or 50, I don't know how many pages I've got, and each one overlapping wave, on balance volume, not an instant restart, moving average. It just goes through every one of these formations. And the one that I look at, that I didn't want to call it double camel hump because it sounds so silly, is really the second arch formation in the stochastic. That's really the issue, and that said to me that the pullback that it had from that G at 84.66, the 200 period moving average at 81.28 is absolutely critical. And my thinking was that if we were going to fail today, the test would be if at any point during the day the price went underneath 82.53 for the IWM. If it did that and held, and that's the clue, it had to hold, and what happened is it went under it. It went to 82.38, and just like the Dow, which went under 13,170, it immediately bounced. So now we get to the very critical thing. The pattern that I'm looking at here, that you can see from the low bar in the daily chart of 78.41 on the 6th of March, ran up to a peak A, B, C at 84.39, and then it was making an oval formation. It ran up to a peak D at 84.66 on the 27th. Now it's pulling back and it's hugging that 9-period exponential moving average, as the MACD has a very flat differential between the fast moving average and the slow moving average. That is really important because the stochastic is pulled all the way back to 61.10. If there is a close above Friday's high of 83.60, there's just a really good chance that this week, which historically, actually, I remembered that, but this week is historically very often a pretty good week. So putting that into the whole potpourri, if the IWM closes above 83.60, I'd probably say 83.68 to get it closer towards it, 84.66. That 84.66 says I become a target. Not only do I become a target, the neck of this stalk leg formation, that's the leg, that's the body, and that would be the neck, goes right through 84.66. I'm watching this really closely. To me, it's a really important day, and I'm watching this together with things like the XLF, which is holding darn well. It looks, in fact, the XLF looks like it wants to break to a leg D. It's almost the same pattern. I could do exactly the same thing here. So you can see when you put it together with all the different components, even though when I went through so many charts, mostly NASDAQ charts, let me just explain the XLF, which is the S&P Select Financial Spider Fund. The way it's acting right now, it looks like it wants to break above 1601 to start leg D to the upside. So that says there's strength there. The IYR, I know you didn't ask about it, but I'm trying to put it together. I know you like to look at big pictures. So peak B was made in the IYR, which is the iShares Dow Jones US REITs Index Trust. 62.81 was the high in the 19th. It's making a cup formation. That cup formation says if it's able to close above 62.90, 62.81 was the high. 62.90, that's very good, because that at close, I'm saying on a daily basis, that says that's almost certainly new leg C up, and we should get a leg D. So my big concern was that the Qs, 1, 2, 3, 4, 1, 2, 3, the Qs had pulled back from a peak D at the same time as I'm looking at stocks like a CMG, these have been outstanding winners, which is acting very weak the last 3-4 sessions, and I think it's making a short-term top. NUS, I went through all the IBDs, the top 20. NUS, which has just been on an absolute tear. This is ultra something. Oh, this is New Skin Enterprises. It's been a fantastic winner. It looks to me like it's making a peak E in the monthly, possibly maybe a peak F in the weekly. So when I go through those top stocks in the NASDAQ, the IBD type stocks that is, I'm looking at them and I'm saying there's no question in my mind they should be pulling back. Whether that was persuasive in my thinking to say, well, that implies the same thing with the other indexes, I'm not sure. All I'm saying is that I love the action as we are 2 hours into the session today on the IWM. I have to admit it, although I don't really want to. The Dow chart right now, if the day stopped, this is a great candle. So those are the parameters. So in answer to your question, if the IWM closed below $81, it's at $83.33 in the next 5 to 7 sessions, I would say that then we are in for a short-term, I'm calling a short-term 3-week to maybe a 4 or 5 week correction, but I would even say 3-week-ish correction in the weekly chart. So I hope that helps you. Those are the parameters I'm looking at. And I'm probably not going to do anything in the IWM until I see one of these levels break out. That is 80, get to 83, somewhere on 83.67, preferably just on 84 for the upside, and the downside take out the candle of the 29th, which is 82.01, and that'll say, okay, be careful, because now you could test the candle of the 23rd to 81.25.
Basil, thanks so much. That was a real helpful review.
Good. So I hope that I covered the parameters. So in answer to your major question, I don't see anything in the weekly and the monthlies at this particular time. I might see in the weekly on Friday, this coming Friday, and I might see something in the daily if those particular parameters are taken out, either way, upside or downside.
Great. Thanks again.
Thank you very much for calling. Now, a couple of things that I want to do. I will be doing Larry's show, which is Trade What You See, straight after this. I'll be going to I'd like to look at the currencies, and I'd like to look at, we looked at sugar the other day. I'll go back to them. I'd like to look at lumber, see where that is. Meantime, I'm going to take this opportunity right now. The beginning of the week, this is what I want to see. The HGX has had me a little bit worried on the weekend. The HGX is the Philadelphia Housing Sector Index. That is at a fantastic move, and it's trading at 126.22, down 99 cents. No big deal, except I do not want to see this break down, because the housing and the construction sector, let's look at the ITB. Yeah, the housing and the construction sectors have been the absolute best, and they've been acting so well that I just don't want to see them break down. So if the ITB, which is, as I said, the iShares U.S. Home Construction, if that closes, it's at 1457. If it closes under 1423, it says to me that the 50-period moving average of around 14.11 is going to be absolutely key. Why? Because it had a particular structure that was very positive 4 days ago, when it closed up at the 1521 level, above that declining trend line that you can see there. Pattern I call this is the falling axe, so it looks like a cone. The axe handle would be like this, like that there. And you can see if you've got that axe at an angle, then the blade itself is expanding. And that's really the pattern. Well, it's acting okay. It's down 16 cents. Not a big deal, 1.05%. But I don't like the fact that there was even weakness, and that is again underneath the 9 EMA. Is that a spectacular move? You can't expect that it's not going to digest the gains. I just didn't want to see it right now. So what's happening is the 200-period exponential moving average in the ITB at peak F about 3 weeks ago, and that high was, what did I say it was, 1548? Yeah, 1548 on the week of the 16th. All it's doing is digesting. But there's going to be more of a digestion if it starts to close a couple of weeks underneath 1450, which is the 9-period exponential moving average, especially if it gets into the lower part of the candle of the 9th, into the 1370s area. That would say to me, got to be careful. So I want you to mention that, and I'm going to put together now with the HGX index to say, look, same thing's happening here. Here you've made a peak D in the daily, but in the weekly, just as you had the peak, was it E in the ITB, and you're holding okay, and the MACD is good, and the stochastic's at 88%. But look, it made a lower high when it went to the peak D than when it was at peak C. And that says to me there's some internal weakness that's going on. How it deals with it, we will see. But if you look at Lennar, which has had a fabulous move, which is that recycled up, is that right? To 2347, 2311, 2311. So that's A, B, C, D. So look at this. I'm calling it a phantom peak because it has all the prerequisites, and that goes to peak. And I'm going to call this, for now, just to be safe, a phantom peak right here. So it's an instant restart with a phantom peak in the ChapmanWave for those of you who do phantom peaks and instant restarts based on the ChapmanWave. And that's this with two parallel highs on the week of the 20th of January at 2311 and the week of the 27th at 2311. Why did I say that I can call it a phantom peak? If you look at the stochastic, it took a turn to the downside. So that says that bar of 23.11 on the 27th could really have had a 1 penny pullback to make a peak A. Not only that, I like to be as conservative as possible. That says we're at a peak D in the daily. If we pull back here and the Lennar, which is trading at 26.77, it's a home builder, if it closes under 25.08 this week, time out. So you can see what I'm looking at. When I go to, I wonder if I got time to do it. Yes, I do have time to do it. I'm going to go to, I'll just pull it up real quickly. So let me take 1 second. I'm going to my Investors Business Daily. I'm going to go through, here we go, investors.com. And I'm going to move over to the section that says, coming up here, it's going to say that IBD 50. And of course I didn't do that, so I have to go back one. So nothing's easy when you're in a rush. There's an expression that says make haste slowly. So here we go, and it's coming up, and now I'm going to get the thing. It says IBD 50, and let me go through these things. Now what's really fascinating for me is in the IBD 50 you've got at the very top, I think it was ALXN. Well, while it's coming up, I know these things by memory, so I don't know why I'm even waiting. So ALXN is Alexion Pharmaceuticals. It's one of those huge winners on the Nasdaq and the IBD as well. It's gone to an all-time high at 95.01 last month. It's made a doji top in the weekly, which says, not a doji top, a doji in the weekly at a potential peak F/B. So if it pulls back this week and it goes underneath 87.03, it's at 92.87. That's really far away. But let's just say it does that. That'll say, okay, time out. But look, it's been a great winner. The daily is in a peak D. And so I'm going through that. RGR is Sturm Ruger. Is that? No. Yeah, Sturm Ruger is right at the top of the list. It's making a leg E to the upside, a winner. It's one of the great winners in the look, all-time highs, up above the 9-period exponential moving average. If it goes above, yeah, it did. It went above the doji of last week on the candle. That's a positive. So that says it's in leg E. You got to be a little bit careful. And as I went through each one of these particular stocks, Apple's another one. Let's go through Apple. There's the break. I'll be back straight after this break. Basil Chapman, Tiger Technicians Hour, 877-927-6648. There's still time for some calls.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find is an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. As I mentioned before, I'll be doing Trade What You See for Larry's show straight after this. I'll just continue here. And right now we've got Ari in Arcadia. And Ari, how are you? Are you there?
Yes. Can you hear me, Basil?
Yes, I certainly can.
Okay, I am doing very well. I've been following this TAC for a couple of months down.
Okay.
And today I put a little cash into it just so I track it. But I'm thinking it's setting up to go up.
You know, it's interesting. I've never seen this TAC. What do they do?
They're a global supply of electricity.
Of electricity. Okay, that's interesting. I think you've got a fantastic entrance in terms of a little pilot light position. And I'll tell you why. The weekly chart still looks very poor, but it's at 11% in the stochastic, and the way that the fast-moving average is trying to turn up today says to me that there's a chance it will not flatten out. that there's a chance that it could move higher. That's number one. Number two is TAC is trading at $18.81. It's up 4 cents. It's the candle that's forming. Of course, the day's young, but the candle that's forming, if it even closes anywhere close to what it's at right now, the MACD will make the W formation, but the stochastic has a good chance to cross positive. That's the first sign. It's at 16%. To get to over 20%, you will have to see this break above the 9-period moving average of 19.01. If it can close above 19.01 anytime this week, then what I would say to you is, in terms of adding a position, wait for the pullback. If the pullback doesn't take out the low of today of 18.64, and in your 120-minute or your 60-minute chart, if you can see a little bit of a support that's coming in based on, say, the 9 EMA, if it goes above it and then pulls back, you can add a second position, and that'll allow you to use your trading position kind of like a core position. And the new position, you can treat it more as a trading position. Why? Because the weekly chart says that even if it was to rally, it would have to decisively break above $19.50, the high of the 26, and then close well above there to be able to avoid some kind of a retest. You know how it's called the restart in the Chapman wave? So to avoid the restart being unsuccessful, in other words, breaking under and closing below Friday's low of 18.45, you want this to move up, have a little bit of a pullback, and then as it breaks to, say, leg B, you can start your second position, something like that. And that second position, you can have a trading stop, and then the real test will come as soon as, if it's able to get towards the 19.40 to the 19.50 area. That's going to be key. And how it holds there is going to make it's going to be a big deal in the weekly. Why? Because there's a much better chance that you're going to have an inside bar this week than at any other time, because it was such a big candle that was formed between 1950 and 18.45 last week. So it's just a starter position. I really can't talk to the monthly chart, although it seems to have a consistency here. It's gone to 2 peak Ds, 1 peak D and 1 peak E, and that peak E was a little lower at 23.30 in January of 2010. It only went to 23.09. September of last year. That says to me that's internal weakness. It had a full ABCDE count in a very short, one of the shortest periods. I'm going to use this actually in my book as a good example of a monthly chart going in a very quick peak A, B, C, D, E, and that was a period of 2.5 years to get to 7 peaks. So that's my recommendation. A little nibble now is good. And the way that you add to it is going to be very good. If it closes under today's low, be a little careful. You can give it a stop of a penny below Friday's low. Thanks so much for calling, Ari.
Thank you so much, Basil.
Thank you. Oh, we've got we've got Mo in Glendale. Mo, can you hold on into the next hour and we can talk about your stock? Basil Chapman I'll be sitting in for Larry Pesavento straight after this.